Good morning and welcome to 7 at 7 from the Economic Times podcasts, a daily financial news capsule to get you clued in for the day. I am Bhaskar Datta. In major global news, Intel, the semiconductor giant, is looking to rebound from a recent period of underperformance, with a plan to cut down unnecessary business and boost capital spending. Reuters reported. Intel's CEO and other key executives will present a plan to the company's board later this month, seeking to reduce overall costs by selling businesses including the programmable chip unit Altera, the report said. Remember that Intel has been going through a lean period, as the company, which once ruled the global chip-making business, faces intense competition from recent AI entrants like NVIDIA. Turning to the question that's been making global markets dance. How much will the US Fed reduce interest rates later this month? Well, if the latest US consumer spending data is anything to go by, not too much. Data released after Indian market hours on Friday showed that US consumer spending rose 0.5% last month, higher than 0.3% a month ago. The data support the case for the Fed to kick off a rate cut cycle with a 25 basis point reduction, instead of the 50 basis point cut that some were expecting earlier, due to fears of a US recession. If there's one thing that drives international capital flows and influences currency movements more than any other, it's what the US does with interest rates. So the global investment community now waits with bated breath for the Fed's next interest rate policy statement on September 18. A pretty big deal is brewing in India's consumer segment. ET learns that the Burman family of Dabur and promoters of Jubilant Group, the Bhartiyas, are separately closing in on a 40% stake in Hindustan Coca-Cola beverage for rupees 10,800 to 12,000 crore. This values Coca-Cola, India's wholly owned bottling subsidiary, at rupees 27,000 to 30,000 crore. A decision is likely by the end of this fiscal year. Remember, ET was the first to report in June that Coca-Cola intends to sell its stake in HCCB before it eventually makes it public. It has sounded out businesses such as Pidilite Industries and the promoter family of Asian Paints, along with the Burmans and Bhartiyas. Here's news about a segment that has exploded over the years due to the changing contours of the FMCG industry. I'm talking about gig workers, of course. The government is working on a comprehensive strategy for their social security, Labour Minister Mansukh Mandaviya said on Sunday. Workers will be included in the government's eShram portal. The portal, as you all know, is meant to enroll, register and collect data of all unorganized workers. Mandaviya said they will also be formally recognized and under the Code of Social Security. You know which other sector employs gig workers in hordes? Logistics. So here's some news from that segment. Blackstone Group's India-focused logistics platform, Horizon Industrial Parks, will manage the government's portfolio of 13 last-mile logistics assets across the country. For the next 45 years, Horizon Industrial Parks will redevelop the government-owned assets into modern Grade A facilities, tailored to tenants in fast-growing sectors such as e-commerce, retail, third-party logistics, and cold chain. Remember, India is very keen on building high-end warehouses, a segment that's slated to grow to 3 trillion rupees by 2032. The government recently announced the setting up of 12 industrial parks. Okay. Now, which section from India Inc. is the latest to have come under the RBI scanner? About half a dozen companies that have been significantly reducing the value of their offshore investments. The banking regulator, which has the last word on cross-border fund flows, suspects that such overseas investments are simply subterfuges to move money abroad. The overseas direct investment route was used to transfer large amounts which could not have been remitted under other foreign exchange regulations. Since a company can remit up to 4 times its net worth as ODI, the amount that company promoters can shift outside could be considerably more than the yearly limit of $250,000 that an individual can invest abroad in securities and properties under the RBI's liberalized remittance scheme. What the RBI will do to bring such companies to book remains to be seen. We'll just say watch this space for more action. Remember the 12 crore rupee IPO of a Delhi showroom that was oversubscribed with 4,800 crore worth of bids? Well, there's a massive boom in SME IPOs. What was seemingly a very shallow and restricted market of less than 500 interested parties for each share sale on average 4 years ago now draws applications that run into six figures. Statistics compiled by ET show that from just 408 applicants on average in FY20 and 511 in FY21, these SME IPOs drew a staggering 219,000 applications so far in FY25. And the showroom that I spoke about, Resourceful Automobiles, that's not the only one. In 4 IPOs, Hoak Foods India, Medicamin Organics, Quara Fine Diamond Jewelry, and Maxposure, the retail portion was subscribed more than 1,000 times. Is this just another case of froth accumulation that the regulator keeps an eye out for? Let's see. Meanwhile, 6 IPOs and 10 listings are lined up in the market this week. They include Kala Precision Engineering, JM Global Foods, Nature Wings Holidays, Mac Conferences and Events, and Maimudra FinCorp. That's all for today. Thank you very much for tuning into 7 at 7 from the Economic Times podcast.